Thank you very much, Scott, and welcome to The Exchange. I'm Kelly Evans. Stocks are higher right now, but where they end up for the week is still a bit uncertain. Where Fed policy is headed following Jay Powell's hawkish comments yesterday, that's also a little uncertain. So let's kick things off this hour with someone who can directly shed light on what to expect from the Fed from here. And that's San Francisco Fed President Mary Daly, who is here now along with CNBC senior economics reporter Steve Liesman. All right, Steve, kick things off for us.
You just did. You kicked it off. Mary Daly, thank you for joining us this afternoon, or this morning by your count.
Glad to do it.
Okay, so what Kelly just read is sort of the question I have. Where are we right now on Fed policy? I think there might be a little bit of confusion in the sense that, are we one bad inflation report away from hiking rates, or does you and the committee need to be convinced with a series of bad reports to hike rates, or are you on hold?
Okay, let me first say that I'm going to speak for myself, and here's how I see it. How I see it is that policy is in a very good place. We have it positioned so that, in my judgment, the risks are over-tightening and under-tightening are roughly balanced. And we see policy working. That's the second point. Policy is working. The economy is slowing. You see some of the real side variables, employment, et cetera, easing. Those are good things in terms of the forecast for inflation. And the news on inflation has been fairly good. And we shouldn't dismiss that. It's been good. All of that said, it is far too early to declare victory. And I think that's why, there's a lot of demand for certainty that we would say we're done or we're definitely hiking. But the truth is we don't know. And we shouldn't really declare one side or the other, because prudent policy, optimal policy, means we stand in the ready position, ready to stop if the inflation data continue to perform well, and ready to raise again to get to sufficiently restrictive if we need to pull the reins back on the economy even more. And I think that ready position is something everyone understands in sports. You stay in center court. But when we do it in policy, people find it confusing. But I think it is optimal policy positioning right now.
Mary, I was listening to Fed Chair Powell yesterday, who now twice, once at the press conference and once in his speech yesterday, said the Fed is not confident we have reached the rate where we will bring down inflation. And I know this is not sort of a wonky monetary policy question, but shouldn't the Fed chair be confident that he's in a place where inflation will come down? Are you confident we're at a place where inflation will come down at this level?
So, if I may, I'm going to use an analogy because I think of it this way, right? You can be significantly restrictive, which I think we are, and you can still not be sure if you're sufficiently restrictive, which is, again, where we are. Now, what does that mean? Well, if you've ever ridden a horse, it looks like this. You're pulling back the reins, and the horse notices you're pulling back the reins, and that's significantly restrictive. But you don't know if the horse is feeling that bridle enough to be sufficiently restrictive to stop. And so, much like the horse, we're in a position now where we know we're significantly restrictive, but to really be truly confident that we have a sufficient level of restriction in the economy to bring inflation down, we're going to have to watch the data and see if the economy is slowing and inflation is consistently coming down. So you mentioned at the top of the question, are we looking at one report, three reports? I'd really like to get out of the idea that data dependence is a single report or even two reports. It's really about how you put all of that together, including all of the outreach we do when we talk to businesses and communities and unions and workers and ask, how do you think the economy is going? Are you still hiring? Are you cutting back? Are we seeing inflation come down, input prices, et cetera? So it's going to be the constellation of data plural, that we're going to have to look at. We're going to have to be very forward-looking here. And so that's why too early to declare victory, but I don't want to discount the fact that we're in a good place because we can be able to move easily and agilely depending on what the data bring.
I want to come back to that, but I want to just make sure, because when Raphael Bostic sat across from me and said we're sufficiently restrictive, it was a big deal, because that's the metric that Chair Powell has put out there for once we get there, we can stop. Is Mary Daly saying now we're sufficiently restrictive or not?
I'm saying I don't know yet. And I think that's okay. I feel confident in saying that it's not clear yet. And reasonable people can disagree here on whether we're sufficiently restrictive, but I just would remind all the listeners that everybody's views depend on their outlook for the economy. And what I'm saying is that our outlook for the economy, while quite positive, still has open questions. Will inflation really continue to come down as we need it to? Americans have been waiting too long for inflation to come back down to 2%, and it is our job and our commitment to remain vigilant on that battle until we can really deliver on that promise over a reasonable time frame.